Yields on the 10-year US Treasury are down, and gold's seasonality, which historically, from a seasonality perspective, gold normally tends to do well from the months of June through the Chinese New Year in February, is finally starting to pick up. And the manipulated paper gold price in US dollars has finally popped its head above $1,800 an ounce today. Now, you're also starting to see a number of other stories come out in the last week or so about how Indian gold imports are starting to finally pick up. So this is private sector Indian gold imports. So over the last couple of months, I've been covering these stories. There was a temporary dip in Indian gold imports, I think in the month of May. So March and April, Indian gold imports spiked. May, I think they dipped. In June, they popped up again, very, very big. There's a chart going around. There was a very big spike, one of the largest spikes for Indian gold imports in a long time, a number of years, I believe, larger than even the spike in March. And then also a story came out recently about how the Russian finance ministry plans to buy another $4 billion worth of gold here in the month of July. So they pre-announced that. I'm not really sure why. It's kind of unusual for a large government to announce that they're going to buy a lot of physical gold in advance, but you're starting to see with a lot of these surveys, so whether that's investment bank analysts or the World Gold Council that are surveying central bankers, they are planning on accumulating more physical gold for the rest of 2021 and 2022. Bloomberg just came out with an article in the last 10 or so days about this, detailing this, citing investment bank research. The World Gold Council did a survey on this in the last month or so. I also covered this on another recent video over the last couple weeks or month, if you want to go back and look in the archives. So the bottom line is that physical gold demand in China and now India, accounting for over half of physical purchases, has increased, swinging gold prices from discounts to the global gold price to premiums. And it appears that gold's seasonal strong period is finally beginning again. The other thing that we're starting to see is a lot of central banks in Asia, Eastern Europe, and out of the G7 are accumulating massive amounts of physical gold. So central banks are net buyers outside the G7, and central banks are buying the dip. And as long as the Fed wants to do yield curve control, and the Fed's balance sheet is going to keep trending upwards, especially because the U.S. federal government's going to keep running large budget deficits. Although I think for the next 6 to 8 weeks, I don't think a lot of U.S. Treasuries are going to be sold by the U.S. Treasury. I think there's going to be somewhat of a break for the next 6 to 8 weeks before Treasury sales resume again in mass. But the Fed's balance sheet is going much, much higher, already above $8 trillion. If you go back and listen to the interview I did with Lynn Alden back in March, she projected that over the next 12 months that the Fed's balance sheet base case would be at least $9 trillion officially. Off balance sheet, who knows in those special purpose vehicles what the Fed is buying. Wells Fargo just announced some problems with personal lines of credit. Who knows what types of credit instruments or derivatives losses that Wells Fargo has. Remember last year, there was an article out from The Atlantic from former investment banker Frank Portnoy that was alleging that Wells Fargo Bank had $1 trillion off balance sheet in bad derivatives, commercial real estate mortgage-backed securities, and other toxic garbage that was either worth pennies on the dollar or worth zero. They had stuffed $1 trillion of this garbage off balance sheet, hoping to hide it and not get caught. So all these global macro problems are all in the long term good for gold. In the short term, the paper price can still be smashed if people believe that the Fed is going to hike rates in the next 18 to 24 months, or if yields on the US Treasury do start to rise, although I suspect that the Fed is already back in the market doing covert yield curve control. So if you want to read more about this, there will be a number of articles in the information and description section about central banks buying more physical gold for the rest of this year and next year, how investment banks and other surveys are projecting this, the World Gold Council and investment banks that surveyed central bankers, Russia's plan to buy $4 billion worth of physical gold in July, and also how Indian gold demand, Indian gold imports, has picked up again in the month of June. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want more in-depth, far more in-depth, research, content, information, analysis, and financial education than I can provide in these short little free videos. There is over 170 articles, charts, and audio podcasts behind the paywall over on my Patreon for only $5 a month, the cost of a Starbucks cup of coffee. For those of you who say that you can't afford it, it's the cost of a cup of coffee. And there is a ton of information there in those articles, including 16 new articles out in the last 6 or so weeks on a lot of interesting topics, including an update on the Sandstorm Gold $138 million deal, going through the details of that last week. And then also this week, there's another new article out about how higher oil costs could affect the profit margins of a lot of the gold miners. So if you want to learn more about the gold mining industry, you want to see how profit margins can be affected, I go through the article and cite a number of sources showing how margins have already been squeezed a little bit in Q1 and the damage potentially that could happen in Q2 and beyond if metals prices do not rise and oil prices either do not fall or continue to rise. And like I said, there is 16 new articles out in the last 6 or so weeks on a lot of interesting topics about global macro, companies, and sectors. I think it is one of the best deals out there. If you don't like it, you can always cancel, although I think you're really going to like it. And I charge less than my competitors, only $5 a month. I think I charge less than anyone else in my entire space for premium content. I think it is a big time bargain compared to a lot of the other stuff out there that charges $10, $20, $30, $40 a month. I think you're really going to like it, especially for the price. So a lot of people can get high quality information and it's affordable. Thank you for listening. And the bottom line here, if I could wrap up this short little video, is that there are a lot of entities, central banks outside the G7, central banks in Asia, central banks in Eastern Europe, that are accumulating physical gold. And you're seeing the physical gold demand buyers from the private sector in China, Asia, and India. They are accumulating more on the dips. There was a temporary drop in physical gold demand in India, but it looks to have returned. So we're seeing just more and more physical gold go to the east. And that trend will probably continue. I think 2020 was an aberration, and we're going to see a lot more physical gold demand in the east compared to the west, where a lot of money managers still want to buy GLD and SLV if they buy any gold or silver exposure at all.